Hey guys, welcome back to my channel, and today we will be discussing the recent bank failures in the United States, the government's bailout, and what this means for the future of banking. Within a short period of frame, three major banks in the United States have failed: Silvergate, Signature Bank, and Silicon Valley Bank. Although these banks had their unique features, they failed for similar reasons. Primarily, all three experienced a run on the bank's phenomenon, where too many individuals demanded large sums of money very quickly, and the banks did not have sufficient cash on hand to satisfy these demands. It is essential to note that these bank failures cannot be compared to 2022 crypto crash, when companies like FTX collapsed because they were insolvent. In contrast, the illiquidity of the banks was the main issue. Banks' run can become insolvency problems if the banks have to sell their long-term assets with bonds to satisfy depositors' cash demands. Treasury bonds are considered to be a safe investment that banks invest in for stable returns. However, if interest rate rises quickly, the bond's value on the open market drops, leading to a loss if sold. Although holding the bond to maturity would not incur losses, but it is not an option when depositors require cash. Although it may seem complicated, but the basic idea is that the banks were forced to sell long-term assets such as bonds, which resulted in losses due to bank runs. This liquidity crisis quickly turns into an insolvency crisis, ultimately leading to the shutdown of some banks. The government does guarantee bank deposits, but only up to $250,000 per account. However, some account is held by venture capital startups, and banks like Silicon Valley Bank had much more than that. This led to calls for depositors to have their money guaranteed up to $10 million. The US Treasury eventually stepped in to save both Silicon Valley Bank and Signature Bank, citing a systemic risk exception. While some saw this as a win, others criticized the government for only helping a certain type of person. Additionally, it was pointed out that some executives and shareholders had already cashed out before the bank collapsed. Regardless of one's opinions on the bailout, the special treatment given to systemically risked bank sends a clear message that the wealthy should move their money into banks that are too big to fail. In conclusion, the recent bank failures in the United States serve as a wake-up call to both regulators and consumers. Banks should be required to hold more cash and liquid assets to prevent such crises from occurring in the future. And consumers should be aware of the risk associated with keeping large sums of money in any single bank account. Hope you have enjoyed the video, and if you enjoyed it, just like this video, subscribe to this channel for more exciting videos. Thank you so much for your time. Bye-bye.